That shouldn't deter you. That shouldn't deter you because, as Warren Buffett has said, if you don't learn to make your money work for you, you will work till you die. So you have to make your money work for you 24/7. And that's the opportunity that we want to talk about today. So a brief overview of the outline today. I'm going to talk about the overview, give an overview of financial market. And I'll break that down into capital market and money market, and then we'll focus on the money market side of things before we move into manual trading or auto trading and the pros and cons and how you can begin to make money, without even, knowing how to trade. And if you want to learn how to trade and make money personally, you can continue to make money whilst you learn. So but we're not giving investment advice today. We're just talking about trading. It's as Michael has said, is a risk asset, but um, if you think about it, all of the billionaires in this world participate in capital markets. So you have to ask yourself, why do they continue to participate? Okay, next slide, please. Right. So if we talk about the financial market, we're actually talking about two sides of the market. We're talking about the capital market and the money market. And for the capital market, we have the primary market, where companies and government directly approach the market to raise long-term funds. So you think about it, your Google of this world, your Tesla of this world, they go out into the market, issue what is called ordinary shares or different kind of instrument to raise money. And then the secondary market is where you and I, maybe after we subscribe to it originally, we trade those assets. So you go and sell your shares for money, or when it appreciates, you sell it. Or if someone is looking to sell, what if you have not been able to participate at the primary market level, you buy. So you think about your platforms like Trading 212, your Robinhood, or through the banks, you can participate in the secondary market. So usually the things you buy in the capital market, a lot of people buy it for long-term keep, to build a portfolio, a diversified portfolio. Some trade it. Some people trade stocks. They do it as day trading or regular trading. But majority of the people that participate in secondary markets do it for diversified portfolio. And then we have the money market. This is where the banks play. Okay, so the banks play in the money market. The interbank in particular, they lend themselves money. They give money out to institutions, to big corporations as well. And then we've got the currency market side of things. Currency, like the earlier speaker said, is the flow of money. So exchange of money. If I want to go to the United States, for example, and I need to spend money there, I will need the US dollar. If I'm living from the UK, I'll need the US dollar. So for me to be able to spend money in United States, I have to buy US dollars. If I come back and I have money left, I have to sell that US dollar. So in a nutshell, the currency market is where you trade currency. Individuals trade there, institutions trade there, government trade in the currency market. Next slide, please. Right. So what is the history of the currency market? It's been around for decades. So there's a history to it. Uh, in the early days, we had what we call the barter system. So if you want to maybe buy some food stock, let's say you want to get some rice and you have maybe yam in your barn, you exchange that yam for some rice. Okay. So that was used to build a system until the gold was discovered. And then around the 6th century, the gold was then introduced as a means of exchange. So that became the standardized medium of exchange. Depending on the size of the gold, it will determine what you can get back in return. Okay. So that became for a while the medium of exchange until the currency was introduced via the gold standard in the 1800s. Now, countries adopted the gold standard where paper could be exchanged for a fixed amount of gold. So then you begin to hear things like gold-backed currency, gold-backed currency. Okay, the amount of gold you have in your reserve determines the value of your currency. And that system carried on until World War I, when countries needed to print more money to fund the war efforts. And this was largely championed by the United States. So next slide, please. Okay, says remote. Next slide. Okay, I can control. Okay. Sorry, gone too far. Okay. So I'm using a MacBook, so the controls are slightly different. So bear with me, please. Sorry, a Mac. Okay, that's a log. Okay, right. So I spoke about the barter system, and then that evolved into what we currently know, which is the current system of exchange, into what we call the Bretton Woods system. This was this was established in 1944 when countries came together and then pegged the major currencies to the US dollar, which was then convertible to gold. Now, you may or may not have heard of the Bretton Woods. Bretton Woods is actually in the United Kingdom. That's where they met. That's where they had an agreement, and then started the current currency system. Now, from the 1970s onwards, we had the modern Forex market. We then evolved, and it meant that a lot of people could freely trade based on supply and demand. So it was a supply and demand system that was introduced, championed by the United States. So today we have the Forex market, which is one of the largest and most liquid markets in the world. And this is why nobody can ignore this. It's the biggest market in the world where you find liquidity. If you're looking for cash, that's one of the places you can easily get cash. You can easily get money. Now, this has come to play a crucial role in global trade. So think about it. A company in the United Kingdom wants to trade, transatlantic trade with Asia, for example. You need current Asian currencies to trade. So you'll be looking to acquire their currency to be able to trade. So this is why this market is important. There are lots of stakeholders in the market. You have a government, you have multinationals, you have individuals, and you have banks that are participating in this market. That is why it is one of the biggest market, and it cannot be ignored. It's a 2.7 trillion quadrillion market. So as of 2022, the size of that market is approximately 2.7 quadrillion. That is staggering, okay? And the average daily trading volume is 7.5 trillion. What that means is that you have an opportunity. Everyone has an opportunity if you know what to do to participate and get a part of that 7.5 trillion. But you don't know what you don't know. And this is why we are here to talk to you about this. This market is larger, significantly larger than the daily trading volume of New York Stock Exchange. Just put that into perspective. You have all the Fortune 500 companies. You have your XPX 500, you have your NASDAQ, you have your oil companies. They trade their stocks on the New York Stock Exchange. What I'm telling you now is that the volume they trade on a daily basis is nothing compared to what you have in the Forex market. It's a $7.5 trillion market. So it's immense. It's absolutely immense. So if you really, really know what you're doing, you will participate in Forex market. But you need to know what you're doing first, or work with people that know what they're doing. Okay, so how do you make money from this market. Now, you make money from this market either by manually trading it or using automated tools to trade the market. So you do automated trading, which is robot AI trading. So what's the difference? What do I mean by manual trading? What do I mean by robot trading? I'm going to give you talk to you about that in a minute, and then you can decide which part you want to learn. Now, for manual trading, you have to go through a process of education. You can't just jump into it. And whilst you are learning, you want to make sure that you don't expose yourself to the market too much so that you don't make costly mistakes, because you'll be competing with people like me, people who have been trading for decades that know exactly what they're doing. It's like playing chess. If you're on the chessboard and you don't really know what you're playing and don't have a system or a strategy, you would always lose. Okay. In 3-4 moves, you're out of the game. So this is why it's important that if you want to trade manually, you learn how to trade. Different trading strategies. So you have what's called trend riding. You follow the trend. There's what's called swing trading strategy. There's news trading. There's carry trade, breakout trade. So many strategies, but all of these fit into a system, and you need to learn the whole system. The most difficult part of manual trading is understanding which system is most appropriate to you and how to master that system. All of the systems, you make money from them, but you need to learn the system and adapt so that you really, really, really have a mindset that trading system brings to the market that gives it the hedge. Otherwise, you'll not make money from manual trading. So it's really important. Consider it to be like a degree course. You're going to the university to actually take a degree course. There's no shortcut. If you really want to make money and be consistent over time, there's no shortcut. You have to learn properly. Okay. Then we have some possibilities. What I will say to you is that manual trading, if you really know it, it gives you opportunity to make insane amount of money in very limited time if you really, 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 really understand the game. So what I've got on the screen are examples, of trading that are done by us, by other members. So you have the first chart here, which is 2000. That's what was made in one day. Sorry, my mouse is going crazy again. 1 second. Apologies for that. Okay, back. So that's an example of assets traded, GBP USD and US dollar, US oil. So that's an example, 2,000 pounds in one day. That's another example of 3,000 in one day. This was again GBP USD and US oil. And then you have again US oil. This is 5,000 a day. This is an example of what was made in a day. Okay, 11,000 pounds. So, but that takes a process. That's not something you stumble into in 1 month. That takes a process. For you to get to that level, it requires a lot of education. But some don't want a second job. Some don't have the time to commit. And that's why there's also an alternative. At Daily Money Club, we do both. So that's an example of manual trading. Now, the alternative, the other bit we do is called robot trading. But before we go into that, let me just show you what the journey of a trader, a professional trader looks like. Now, you have what we call the beginner stage, where you begin to learn. You learn about Forex, you learn the basics of Forex, and then you learn a system, okay? By the time you learn that system, maybe you go to an academy, maybe for 3 months, for 6 months, for 1 year, you graduate from that academy. Then you go into what is called the boom and bust phase. That's a stage where you need to learn about yourself, learn more about yourself, learn how to master your emotions to be able to become a consistently profitable trader. Unfortunately, that is a phase that a lot of people that trade manually drop off because you experience the euphoria when you start trading at the beginning, and then you get to that middle phase that you need to make it work for you. That's where people, lose their discipline. They let emotions get over them, and then monies that have been made just goes back to the market. They lose that money. Okay. Now, there are reasons for this. There are reasons for this. It can be poor risk management. It can be laziness or drop in standard. Now, when you start, you belong to a community. You begin to, look at quality of trades, and things like that. Um, you could be over trading rather than going to your plan. You don't simply know when to stop. So, and that's what kills a lot of traders, that they don't then last in the business. So there's that boom and bust phase. But if you're able to navigate and cross that boom and bust phase, that's where you see the very I would say the 1% of the 1%, right? Because mastering yourself is the most difficult thing. Is one of the most difficult things to get right. And that's where a lot of people fall down. Okay. So, but like I said, we've got the automated trading. You might say, oh, I don't have the time to commit to the education, or I don't even have the aptitude to master the emotions required in this. Okay. Now, the alternative is AI robot trading. And again, like you have in manual trading, that you have different strategies. With robot trading, you have robots specifically developed and designed for different strategies. So you got scalping, momentum trading, trend trading robots, edging robots. But what all of these AI robots do is they do the job for you. They identify opportunities in the market, place the trades, close the trades, and take your profits. Okay, it's a plug and play system. It helps you to identify opportunities, but you also, it's like wanting to fly a plane. If you don't learn how to fly that plane, of course, your guess is as good as mine. You are going to crash. Okay, you're just going to crash. So even though it is automated, even though it is robots, you still need to understand and learn how to trade the robots. Robots are they are designed for different things, different market conditions, different strategies, different instruments. So you really do need to know. Now, Michael was talking about the example you put up on the screen. There are days that robot does not trade. Why? It's just simply because of the data over time that have been collected when we're building the robot and refining it. For example, we have our data that the robot itself does not do well for Thursdays, okay? And for certain economic events, when certain economic events happen. And that data has been collected over time, identified. So what do? We simply make sure that the robot is turned off during those periods. And so this is why, even though it's plug and play, you need to know what you're doing. So we have two models for this that we currently run. Okay. But before I go into that, I'll just talk about the difference between manual and AI robots trading. Now, the first biggest challenge and difference is the emotional impact of trading. Now, because of the nature of the markets, because it goes up and down, and it's a probability thing. Okay. With trading, what you need to make sure is you have a system with the hedge. Okay. It's called system with the hedge. But what that simply means is that when you place a trade, when you operate that system, it is based on probability, but over a series of trades, because that system has a hedge, you will come out net profitable. Okay. Because that system has a hedge, you will come out net profitable. So if you don't really understand the system, if you don't really understand it, the impact of getting losses, making losses, maybe, oh, that system, the head calculation means that out of 10 trades, 5 will win, or 3 will win, or if 5 win, you'll be net profitable. Or if 3 wins, you'll be net profitable. But if you really don't understand that system, the emotional side of it will play on your mind. That you will use your hands to intervene and impact on that system and stop it from working. Okay. Now, there's also the need to be actively involved. Like as we said, it's almost like a second job, particularly at the beginning stage. There's a time commitment. If you are time poor, manual trading is not really for you. I'll be honest with you. If, for example, if you have your full 9 to 5 that is all involving, all consuming, something has to give. Is either you have a plan that maybe your whole weekend is committed to learning, and you look for probably instruments that you can trade over the weekend, whilst you'll continue to learn. Okay. You will be inconsistent for a while until you become consistently profitable. And that inconsistency might be for some people 2 years, for some people 3 years, for some people 1 year. You don't know until you get into it. Okay. A lot depends on you. It's not just because of somebody taught you a system, because you are one person operating the system, and based on how you can manage emotions, you know, and your discipline, impatience, and all that, that determines how quickly you can become consistent or how long you can become inconsistent. And then AI robot trading is more flexible compared to manual trading. Yeah. So it's not, it's not as flexible. Manual trading is flexible. You can say, okay, I know the skill, I've got a skill I have is a lifelong skill. I can trade maybe once a day or twice a week. But again, you've got to get to that level. And then you have the boom and bust phase. The boom and bust phase, sadly, that's where a lot of people give up, because rather than wait patiently to make sure that they are now consistent, they put in a lot of money, and actually money in some cases that they might not be even able to afford to lose, and then they go bust. And the sad reality is that without capital, you cannot participate in this business. You can't. So you actually really need capital to be able to participate. Now, for us at DMC, where we have people that have been enjoying this, we manage accounts, individual accounts, but we also do the Palm Master account model. We prefer to recommend the Palm Master account model, particularly if it's not a huge capital. So if it's not big capital, the Palm Master account is just preferable, because then we're pulling funds together, and with pooled funds, it becomes, one big pot. And you can then better allocate risk. Okay, you can better allocate risk. What I will do, I will show you some examples of what's been achieved on manual accounts. And then a colleague of mine will just share screen on the Palm Master account, so that you also get a flavor of what you get on the Palm Master account. Right. So this is an account that has run for 5 months. In 5 months, that's 40% return. In 5 months, that's 40% return. But what I want you to pay attention to is the size of the account. Now, this account is gross profit 63,000. Okay. This is deposit 39,000. Not everybody will have 39,000 under their pillow and their back pocket. Okay, so this is what I'm saying. If it's an individual account model, you need huge capital, but with Palm Master account model, a lot of people can put together to create a big pot, one big pot. This is another account, 55% in 5 months. Let me move. Sorry, my mouse is frozen. Can you still hear me, Mike? Can you still hear me?
Yeah, we can hear you. You can hear you. I can move it along for you.
Okay, fantastic. Okay, can you help me move it to the next slide?
Okay. Yeah, I think we lost connection with Bami just now. So hopefully it will reconnect. Okay, it's coming back now.
Apologies for that. So I think it was from my hand. Okay.
So I'm to move it along now.
Yes, please. Right. So what we have for you today for the automated trading is a pooled palm account model. We regularly offer that for £500, the joining fee. You have £500 to join for a 12-month period. So for 12 months, you can plug your account to your account. We're not taking money from anybody. The way it works is that you open an account with a recommended broker, and you then connect your account to the master account. We're going to show you an example now. And once you connect your accounts, we are then able to trade it. But for the purpose of this webinar, from anyone that is a member of Prism Check, we are doing a fantastic offer, which is $250 for 12 months. You plug your account to the master account, and then we'll run it. And then in return for that, as well, we'll do a 40-60 split of profits. Now, what we know how to do well is to make sure that we protect everyone's capital. Okay, so we try and make sure that no one loses more than 30%. But we have to put it out there. This is why it's called risk assets. But if you want to gain, nobody gains without taking any risk. That's the reality of it. Markets go up and down, but of course, with the hair robot, and we'll show you other performances. The robot knows when not to trade. Okay, knows when not to trade, and this is the advantage of it. And we also have a training package. If you want to learn how to trade manually, we have a 3-month training. Like I said, that is just the beginning, but that gives you an insight into the fundamentals of trading, and then you can decide how far you want to take it. But without knowledge, you don't know what is out there. And this is why we say knowledge is power. So let's quickly show you an example of a PAM model. So if we can give us sharing rights. Mr. Banji, are you still there?
Yes, I'm still here.
Okay.
Good evening, everybody. It's good afternoon.
Okay, so Mr. Banji is also a partner in Daily Money Club, and he's one of the people that make the magic happen. So we'll show you an example of a Palm account so that you can see what it looks like.
Can we see my screen?
It is loading up. It's loading up. Yeah. Okay.
So this is
before you jump in, I'll just quickly say this. This is an example of one of the funds we manage. So there are several of them. So this one is called DMC Fund 2, I believe, Fund 3. So there are a few of them, and it's going to talk us through what that entails.
So basically what we have is this is the main account that does the trades, that has the pool of money. Here we have 12 investors, and each investor is allocated a particular percentage of according to how much they deposited. So the more you deposit, the more the more of the profit that you receive. So we've got 12 investors here. In total, this is over a period of this is over a period of 6 months. Sorry, over a period of 2 weeks or a week. We started this this particular report is from the on the 20th of June. Yeah. So this is a report about the 20th. That's the beginning of 20th of June. Let's try to scroll through the different pages. Yeah.
So if we go to the summary page again, please. So yeah, so the info page. So as you see on here, this particular fund was created on May 28th, but we actually really started trading it 20th of June because we had to follow a process, you get people onboarded, and that's what's been made for a period of the week. Yeah. So so that just gives you an insight. So there are other funds, but majority of the names on there, we receive consent from them to be able to share it. So everything we've shared with you today, we receive consent. But the others, we cannot share immediately because we have to get consent. But this is just one fund, okay? There are other funds that we can, that we also manage using this model. Okay. All right. So what we'd like to do now is if anyone has questions, we'll open the floor for questions. We'll be more than happy to take the questions. We'll do our best to answer the questions now, mindful of the time we have available. And we can also reach back through Prism Check if we need to take any question away. So thank you for today. And please remember, you need to make your money work for you. Okay. If you don't want to work till you die, you need to learn how to make your money work for you, because we all have finite time, and there's only 8 hours in the day or 12 hours in the day at most that a lot of people work. But if you make your money work for you, it can continue to work 24/7. So I'll leave you with that. Thank you very much.
Okay, so that's lovely. Thank you, Bami, for that. What I'll do now, real quick, is allow people to raise their hands and also ask questions, because I'm sure we've got a lot of questions. So if you can send your questions in the chat, so the chat section has been enabled, and also you can use the reactions or the reacts functionality to raise your hand, and you can be unmuted to ask your questions if you want to. Please, let's go ahead and raise our hands, or so I'll be able to unmute you to ask questions. So whilst people are trying to figure out the questions to ask, I've got a quick question.
Yep.
The example you showed us has US dollars. Does it mean that we have to open?
Right.
I mean, the account, my own account, like I shared earlier on, is in GBP, right? So how does that work? Does the PAM one, does it have to be a USD account?
So you can open your account in dollars or in pounds or whatever currency you want. The master account trades in dollars for a reason, because you need a central currency to trade everyone's funds. So what simply happens is behind the scenes, the funds get converted. So if your account is in pounds, for example, if you have 10,000 pounds, that becomes something like $13,000 that will reflect in the pool. Okay. So depending on the currency you've decided to hold your accounts, we recommend for people in United Kingdom, we recommend GBP. Create your account in GBP, because then you don't have any issues with currency exchange rate when you are withdrawing money into your account. You can withdraw money into your accounts, and this is also very important to state. You are putting money in your brokerage account. You're not giving money to anyone. What we're simply doing is trading the money. So the brokers we use are FCA regulated brokers. They're regulated in the United Kingdom. Okay, so you go there, go through their process, their KYC, you open your account, they ask for your information, you provide it to them. It's just a broker we use. We don't own the brokerage firm. They are regulated by FCA. We don't take money from you, you put it in your account. We only simply connect it to the master account and trade it. So you're at liberty to withdraw your money when you want to withdraw money. Okay.
Brilliant. Yeah, thanks for that clarity. So that's really helpful. Any question from anyone? I'm monitoring the chat as well. It doesn't seem that we have any question posted into the chat yet.
Okay, that's fine. I'm more than happy to come back. Sometimes people want to take it all in, reflect on it. More than happy to come back to come and answer question or do a follow-up session. But what you don't want to do is ignore this currency market. It's one of the biggest markets and is one of the ways to diversify and make sure that you are spreading your tentacles and you are maximizing opportunities that come your way. Okay, so you don't want to not have a look into it.
Okay, perfect. Thank you loads, Bami, for that wonderful presentation and education that you're giving us today. So we'll move on to the next steps now. So the next thing is, what next? What do I do? I know we've given people the opportunity. One
So
second.
there's a question. Someone is saying, what's the minimum entry? I'll let you answer that, by the way.
Okay, perfect. Yeah, so no, that's an apt question. So in terms of, yeah, let me address that actually. In terms of the minimum entry, I think it was on the slides from earlier. It's £2,500 to be a part of this. It's £2,500. And the way we're going about it, I'll break a few things down. You know, I shared my account earlier, and Bami talked about the individual account and the PAM account. So what we were set out to do initially when we started in January is that we were going to allow people on the Prism Checks platform to have individual account that you can connect the robot to directly, because that's what I've got. So I've got an individual account that has got the robot connected to me directly. So to get all that set up, to get the virtual, what do you call it again, Bami? The virtual, is it VPN?
Virtual
Virtual
server.
server. Yeah, that server and all that. It cost me way more than £500 to actually get that all set up. And I initially started, you see everything in the report. I initially started with £2,700 at the time, and then paid the additional amount to get it all set up. And then later on, when we decided that we're going to make the minimum entry, because if you're on my gap up and you notice on that recession, you will see it's 5,000 minimum. We're going to do £5,000 minimum. So we increased our balance from 2,700 to 5,000. And then we wanted to be able to show the evidence that, okay, the 5,000 that we're asking for is what we're going to be, or what we're going to be making the minimum. But I said 4+2 earlier, right? The reason for that was over the period of 4 months, we saw the consistent performance. And I think it was over 10% per month that we saw on a monthly basis, which was quite impressive. So over that period, I think we saw close to 40% over that period. I think there was a month that was below 10%, but that period. But come the month of May, with all the political news and everything that's going on, and I know earlier on, Bobby mentioned the fact, the emotional element that comes to play in this. So in the month of May, to be precise, I noticed there was a week where the drawdown was quite significant. And the turbulence in the market takes place with all that is happening with Mr. Trump.
With Mr. Trump, with Israel, with Iran, That's
Yeah.
created a lot of turbulence. So if you really don't know what you're doing, even though it's a robot, you're bound to intervene. Yeah,
Yeah.
you're bound
So
to.
that was what happened where I mean, I can share with the team because I actually collect these things for evidence and for integrity purpose. I took a screenshot of the position it was at and I sent it to Bami like, what is happening? Now, from my own experience, this happened, something similar to this happened in, I think in February, I think. I'll check my record. I think in February, where I saw a drawdown that was quite significant. I was like, I sent it to him and he said, don't worry about it. I was like, for real? Okay, I'm not gonna worry. Guess what? I I took his advice. I just took, just completely abandoned it. And that single day was when the account, I mean, you will see from the chat, that was when he made the most profit. Can't quite remember the amount, maybe it was 2% of the account that he made in a single. That was wow. So I, from that lesson, I thought, okay, yeah, that's fine. So this time around in May, when I sent this to him, and he was like, okay, don't worry. I think it was drawn down by maybe 2,000 or close to 2,000
Yeah.
or 1,000 something. And then he said to me, he said, he said, if it gets over 2,000 or maybe 2,500, he said, you can close your position. I said, you know what, I'm not going to close anything anyway. Because this is, you see, this is what I said about money earlier on. You need to be prepared to lose money. So risk account or risk asset is, and that's why you don't put all your eggs in there. You don't put 100% of what you have in there. You put only a portion of it because when the profit comes, it can be significant. I know I was sharing this with my wife, and she shared, a program that she was on, a Forex program as well, where she put in 2,000, she doubled the money, and she took the original capital out, and she took some extra profit out before everything went bust afterwards. So it can be highly rewarding and highly risky. So I was prepared to lose the entire 5,000 if because we're doing this for the company. We're doing this for this purpose that we want to be able to show performance to everyone, for integrity purpose. So when he said to me, when he said close, I didn't bother. I said, okay, I'm just going to leave it. But obviously, being a mindful person himself, maybe, I think when the account recovered to about 900 or so, I think he closed the position. So I was a bit angry with him though. I was like, why did you do that? It was like, he's prepared to, pay me back, blah, 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 but he wanted to protect my capital. I said, well, I was willing to take the risk. Guess what? Yeah, he closed the account. I was okay with it afterwards. But I now went to look at the position where that was closed and what the market did afterwards. It actually came back to profit. I think if we left the account, if I didn't send him the screenshots and I didn't call him, the account would have made about £500 profit for that day because I think it rallied back. I mean, the market
Yeah.
is crazy.
Yep.
It is not something that I would
I,
manually trade.
again, this is one of the benefits of the PAM model because if it's an individual account, sometimes when you see the uh, volatility in the market, people who don't understand how markets work, it gets to them, right? So it's for him to take a screenshot and send it to me. It's because he was looking at it, because I knew the interpretation of oh, you're beginning to worry, even though you're saying, but like I said to you, I've been trading for a long time, both manually and with robots. So I understand the way the market works. Everyone at DMC understand the way the market work. We are all professional traders ourselves manually. When you look at the chart, we understand what the chart. Let me, if I can.
Sure, you can. 1 second.
So me and my screen again. Okay. Now, this is what the market will present to you if you're trading, right? You get to see a chart like this. All of these candles mean something, okay? All these patterns. If you are not a professional trader, you don't understand the language this market is communicating. For the market to look like this, it means something. For it to look like this in this time frame, in a different time frame, in a daily time frame. All of these are communicating things to you as a trader. So if you have not gone through the education and learn what the market is actually saying so that you can listen and take action, then you're not going to make profit from it. So even if somebody's account is in drawdown and they're looking at it, and I'm looking at the chart and saying, no, this chart is still telling me something else. But there's no way I can explain that to someone else because they will not get it. You understand? So it's and what you also see is that it goes up and down. Okay, it will continue to go up and down, up and down. That's the nature of the market. This is daily. If I show you monthly time, like, look, the market was up here some time ago. It came down here. It went back up. So the market is not a straight line thing. It's not linear. So it goes up and down. So long as you understand what's called market structure, you can make an informed judgment. And this is where the professionalism at Daily Money Club comes in, because we've gone through the tutelage, we understand it, we are not just saying it, we are practicing what we are preaching on a daily basis. You understand? So, and the more you do it, the better you become at it. That's the reality of it. So you can't just see a Muhammad Ali knocking people down. It's because he's put in a lot of time. You know, Mike Tyson has put in a lot of time to become a champion. You know, he's practiced that kind of, punch several times, and he knows if he gets you with that punch, you are dead. So, and that's the nature of professionals. You have to keep at it on a daily basis, and that's what you get from us.
Yeah. No, thanks, Bami, for that. So what we now decided to do, to wrap this up, is Prism Chair, we've decided to now test the PAM account. So we've tested the individual accounts, and the summary of that experience for us was for 4 months, we saw the good performance. The other 2 months, because of the volatility and the turbulence in the fundamentals and all that in the market, we thought, okay, a smaller account would not be ideal. So, and the explanation I've been given, and also from what we've seen as evidence here, is that it's better that you are part of a pool rather than you're trading your individual small account, which makes sense, right? It makes sense all day long. So we've now decided to connect our own account to the pool account. So this decision has literally been made this week. We're going to put a peg on the individual account and connect it to the pool account. So move all our funds into the pool account and then collect an evidence over a 3-month period. So that's what you're seeing on the screen right now. So in terms of signing up. So over a 3-month period, you can register today. So by the way, actually, if you look into the chat right now, you can use the form in the chat. Click on that form, or you can use that to submit. I noticed someone is saying that they wanted to reach out. So use the form, complete that form, submit it. That is pre-registration. Okay, so it doesn't mean that you're going to automatically be given a space. So pre-register today. On our own end, we will connect. They can collect the evidence for 3 months of the performance, because like I said earlier on, we are very big on integrity. We want to do it right. So after the 3 months, if we are 100% sure, okay, this is the evidence that is performed profitably, then in September, we're now going to open our portal up, and you can then start blogging. We'll then take you through onboarding. So that will take place in September. Now, the screening element of it is because of the philosophy that we believe in and promote, that you should not risk all your money. So if all the money you have in the world is 2,500, sorry, we won't be able to take you on board. Okay. So, I mean, I know the way it sounds, but we don't want people. The most important thing is education. It's not making money. You will make money. In life, you will make money. If it doesn't come from Forex, it will come from other means. Do you get it? Real estate or another way, right? But the most important thing you want to get for yourself is the knowledge and the discipline. So if you don't have 2,500, if all you go to 2,500, maybe you can go and get 5 friends and all you can afford is lose 500. All of you pull your 500 together, trust one person, open the account with that one person's name, and you put your 25 in there. I prefer it that way than you put all your 2,500 into this. Okay? I hope that makes sense. So please go ahead, fill that form. When you fill it, we'll reach out to you, your email address. Make sure you can write email address and your contact number in there. Select what you want, whether you want manual trading. Actually, maybe what I'll do is, let me put this on the screen as well. I'm just going to share that form on the screen so you see what it looks like. Okay. So I know everyone can chat. So if you have any issue with that, you can always put that out there. 1 second. So this is the form. And if you can see my screen. Can you see my screen? Not yet. Okay.
Not yet.
Right. So I'm just gonna. You should be able to see now.
Yep.
Okay. So this is the form. Very simple. All we want: your email address, your mobile number, and then just pick one of these: AI trading subscription or manual trading education. That's all. Okay. So pick any one of these, submit it, and then we'll reach back out to you, and then we'll take it from there. So we'll do the screening with yourself, and if you qualify, we'll let you. So what's going to happen is this program runs on a monthly basis. Okay, so we're not going to talk about Forex next month, right? We're going to talk about something else. But most likely we're going to bring DMC and BAMI back closer to the September time so that you can. We're going to get a lot more people join, go through the pre-registration, and once we have a sizable pool, and so if you have family members, people who you want to invite to come back and listen to these, you can bring them in, you can get them to register. We'll bring Bami back, we'll talk to them again. So the next time we're going to have more people, and we'll get a lot of people register. And yeah, so once we have the target we're looking for in terms of the volume, then we'll open the floor. So everybody, you get screens, and then you get in a waiting list. You put you in a waiting list, and then once we hit that sort of threshold that we want, then we'll call everyone into the onboarding session. We'll show you how to open the account, how to hide your funds and all that. Like Bami said, you go through KYC with the brokerage firm, you do all of that. And once they're comfortable with you, then they'll allow you to put money on the platform because they're actually responsible for that. So they need to satisfy FCA, based on regulations and rules and all stuff. So, and then once you're properly, registered and you put the money in the account, then we can connect into the central pot and start trading from there. Brilliant. So thank you everyone for the time this afternoon. So this brings us to the end of this month's financial strategy clinic and AI Forex webinar. Do we have any question at this point before we close shop? Okay. So yes, you can register now. You can use the form to register. Someone's asking the question if you can register. So any other question at this point? Okay, we're gonna time it out. So thank you, DMC and Bami, for coming along to present on our platform today. Really appreciate your time, much appreciated. So we hope to bring you back soon again. And then for everyone that has connected to this session today, we really thank you and appreciate you. and we'll be in touch with you. So go ahead, use that form. I think once we close this meeting now, you might not be able to access the chat. So I'm just going to give you like 30 more seconds. Just go to the chat right now, pick the link, click on that, and make sure that you complete that form and submit it. Okay. So lovely. Thank you, everyone. And have a nice rest of the weekend. Enjoy yourself. It's sunny out there. Go and have fun. All right.
All
Thank
right.
you all.
Bye.
See you later. Bye.